Um, the tax that the U.S. expat typically pay depends of the level of income. For employees in foreign countries, when the U.S. expats are employed in a foreign country and the foreign company pays taxes to the U.S. to the Social Security Administration of the foreign country, there is a foreign earned income exclusion of $110,000. It means that to avoid double taxation, the income that is earned by an expat in a foreign country and that income is under payroll, there is an exemption of $110,000. There is no tax for that amount. And we have seen cases like this. The problem with the foreign earnings income exclusion is that what happened is if an expat earns over $110,000, the portion over the $110,000 is taxed not at the beginning rate of 10%. It's taxed at the rate that corresponds to that level of income that it will be with the new rates between 22 and 25%. So you have to always remember that even though there is a foreign earned income exclusion of $110,000, whatever amount is earned over $110,000 is going to be taxable to the current rates at that portion of income, at that bracket of income. And that surprises many times to expats because they expect that because there is $110,000 in foreign earned income exclusion, that the portion over the $110,000 is not going to be taxable at the highest rate, but to the lowest rate. So that is, we have seen a couple of times that case that US expats were confused and they were expecting a lower tax bill and they got this tax bill higher than the one that luckily was compensating with taxes that they paid in the foreign country. That is only for a foreigner, for the foreign earned income exclusion. If you make $110,000 and you work and you receive payroll from a foreign company, then $110,000 and below, you pay no taxes. But if you receive self-employed income and there is no any dependent any relation of a working relation between a company and you work this by yourself, you will pay taxes. Maybe you will pay taxes in the country when you earn that income, but that income is also taxable in the US for the simple reason that when you retire, you will expect to claim taxes from the Social Security in the US. So because of that, the IRS expects that you report that income earned as a Social Security, as a self-employed, as a self-employed. The IRS expects that you report that income to the US and pay taxes in the US, minus any tax that you paid in the foreign country. That is the way how the IRS handles the taxes. What is the amount that a US expat pays? It all depends on the income. For the first case, as I explained before, over $110,000, any portion above $110,000 earned will be taxable at the current rate for that bracket, 22%, 25%. If there is more income, it's higher. For income that is self-employed, there are two kinds of taxes. The taxes for the income tax, that it goes by brackets, 10%, 12%, 22%, 25%, depending on the income, and the self-employment tax that is 15% flat. That 15% is what is known in the US as FICA. The FICA is Social Security and Medicare. That is a 15% that is taxable in the US for self-employed income, and is also taxable for foreign income received in a foreign country as a self-employed. Many people do not report that because the IRS has no way to know. There's no way for the IRS to know that you are working by yourself. There's no way. But remember, if you do not report and you plan to claim Social Security in the US, your claim of Social Security is going to be reduced, very reduced, because if you live in a foreign country, you are not, and you are working in a foreign country, you are not accumulating Social Security credits in the US. Therefore, as you do not accumulate Social Security credits, when you claim and you retire your Social Security, for those who are not retired yet, your claim, your payment is going to be very small because of the years that you have stayed outside of the US and not reporting Social Security. That is the predicament that many US expats have the moment that they report. No, IRS has no way to know that you are working as a self-employed if you work as a consultant, for example. But remember, if you are not retired, the IRS, you are not going to receive enough, or the amount that you receive on Social Security from the Social Security is going to be very small.